Good afternoon once again. Welcome to Who is an Insured on Builder's Risk? This is another one of our ongoing webinars. Once again, very educational driven. This is not a marketing driven or sales driven meeting. It's more of an educational meeting. We are definitely dissecting our coverage form and builder's form in general. It's just so critical to understand the form. I have a lot of friends that are agents. The very best of all the agents I know definitely understand the form. So what we're going to do today is talk about something that I think a lot of us take for granted. I mean, even as an underwriter, sometimes forget to go back and look at this and think about it. And what I will do as we go through this today is give a lot of real life examples. These are questions we get every day, exposures that exist in a construction project. For the lack of time, we only have a few minutes here today to go through this. So as you have other questions, we will have a Q&A at the end. But if we don't get to what you ask, send the question and I will get back to you. You'll get my contact information at the end. And I like the phone calls and the emails. I'm kind of a coverage guy, so call me with any of your builder's risk questions at any time. So without further ado, once again, I do appreciate you taking your time out today to hear our story. So who is an insured? We're going to talk about builder's risk coverage today, and just to give you a little brief overview of that. Builder's risk, I just want to start at the very beginning. This is course of construction coverage. It's an inland marine line of business. It's property business. So we're talking about labor, materials, overhead, soft costs, and other things. This is the coverage form we're talking about. I've been doing this the better part of my career. It is an extremely misunderstood but broad form. There's a lot of coverage there if it's written correctly. Sometimes you got to always make sure you ask the right questions. So just wanted to make sure you understand course of construction coverage, and that's what we're here to talk about. So who is an insured on the policy? And this one is, I get this question every day. So the question is, who needs builder's risk coverage? And it's a very simple answer. Anybody that has any financial risk in that project should be covered on a builder's risk policy. Now, should you be the named insured, an additional insured, a lost payee, a mortgagee, that's what we're going to talk about today. But if you have a financial interest in a construction project, you should be covered by a builder's risk policy. And so you start thinking about all the different entities, and we're going to go through the major ones today of who we know have a financial interest in that project. So this is different than, professional liability and general liability and other property coverages. This is going to allow us to cover the project and whoever owns part of that project or potentially could own it. Another way of looking at it too. So the major entities that we're going to talk about today, and this probably handles 90%, 95% of what's out there, would be number one, the general contractor. And for the sake of time today, you'll probably hear me say GC a lot. General contractor, GC. Sometimes we call these guys paper general contractors because a lot of times they don't have employees. Everything is subbed out, 100% subbed out. But the general contractor is number one. And to give you an idea, in our book of business, and it's been my experience, about 2/3 of all builder's risk policies are written as the general contractor as the named insured. So I started with the GC, and we're going to talk about them in great detail today. The second would be the property owner. We could say property owner, the developer, for different things, but you get the idea. It could be a hotel chain, so the owner of the hotel chain needs to be covered on this builder's risk course of construction coverage. And it's about 1/3 of what we do is written in the name of the owner. The other entity that we got to make sure we protect on this builder's risk policy is the subcontractor. I said the GC's out there, so that means a lot of times most of the work is being done by subs. So they have a lot of exposure, they have a lot of financial interest in that project. We got to make sure their interests are covered. And lastly, our friend, the lender, the lending institution, the bank. We'll call them we could call them a lost payee, but let's call them a mortgagee. And I'll touch on that in a second. as we get into this. So the vast majority of all construction projects are financed. Now, we have seen some in the residential area where an owner is very wealthy and decides they don't want to borrow any money. They just want to build, pay cash for it. So there might not be a lender involved. We see some of that sometimes, but usually there is a lender involved and they have a very unique exposure. And we're going to show you how to make sure that's covered today too. So there you go. Those 4 things we'll talk about today. The GC, the paper general contractor. So first of all, this is someone that is responsible for the overall project. Everything that goes on, they're responsible for it. And that's critical to understanding their obligation, I guess. Usually they are responsible for obtaining the builder's risk policy. A lot of times, and then we're not going to get into contract law today, but the other thing I will say today is you probably need to read up on the typical type of construction contracts between the GC, the owner, and the lending institution. They all have different contracts, and how those contracts are worded could definitely involve decide how the builder's risk is paid out. So make sure you understand that. But usually, in the vast majority of cases, you as an owner are going to contract with the builder to build your house. And in that contract, you're going to tell the GC, you're responsible for the builder's risk. Make sure I'm named on the policy. So the GC is at great financial risk when these things are being built. And it's not just labor, materials, and overhead. It also is what we call the soft costs, some of the things you don't think about. A lot of those costs are borne by the GC. So if something goes wrong, who's going to have to pay the price? It's the general contractor. You need to make sure that your policy protects all of their interests. And what I'm going to say about that is, first of all, who is your insured? So John, the builder, comes to you and says, I'm going to build this project and I need you to get me builder's risk. So your obligation as an agent is to make sure that all of John's exposures are well covered, properly covered. So that's critical. So sometimes we worry about the other entities, but let's worry about the entity that we're taking care of first, our insured. So like I said, soft costs. Don't assume that it's just the labor and materials. There's other things involved. If it's done properly and the GC obtains the proper policy, many times the other entities are protected. Now, sometimes you got to add them as an additional insured, or in the case of a lending institution, you got to add them as a mortgagee because there's a specific mortgagee clause in the policy. On the subcontractor side, we'll get to that in a minute, just hold that thought. But the property owner. So a lot of times I have seen it where in the construction contract, it'll say the property owner is responsible for obtaining the builder's risk policy. A lot of times I see this as a problem because the owner many times has no concept of builder's risk. So what do? They go to the market and they buy the least expensive policy. I have actually seen policies that don't cover subcontractors. I've seen policies that don't cover theft. I've seen policies that don't cover materials unless they're installed on the project. So these are the kind of things I see all the time, big gaps in coverage. So make sure that if the contract says owner's going to carry the coverage and your insured is the GC, I would tell your insured, the GC, I would like to see a copy of that policy just to make sure you're covered properly. Chances are they're not. Obviously, the owner is at great financial risk. If something goes wrong with this project, maybe the GC didn't get the right coverage and the GC declares bankruptcy, and now the owner is stuck with a project that's not done correctly. So the other thing, there's a couple of coverages you need to look at if you're insuring the owner. One would be, it's all under the umbrella of delay in completion. We covered that in an earlier webinar, but 2 of those coverages are income coverage or rental income coverage. So if I'm an owner and I'm building a hotel, and because of a covered cause of loss, there's a delay, I'm out the rental income the property would have produced if it had been done at the right time. You get the idea. So there's a big exposure to the owner on loss of rental income or just income coverage. What if I'm a restaurant owner I'm building a restaurant, it gets delayed, cover cause of loss, I'm out income. This is a way to get what I call the time element coverages built into a builder's risk policy. And once again, I cannot stress this enough. If you're insured, either the owner or the GC, and they come to you and say, don't worry about the builder's risk, the other guy's covering it, make sure you audit that policy to make sure that your insured's covered properly. Don't assume it's automatic, because it's not. The subcontractor, we already said there's going to be a bunch of these subs on the project. You got the roofing contractor, the drywall guy, and the sheet metal guy, the floor guy, and the window guy, and I could go on and on and on. You have all these different entities on the job site. So how are they protected? Well, some policies, the best policies, will say the interest of the subcontractors are automatically covered for this project. That's what you're looking for. Doesn't mean you have to list them as an additional insured. They should be, their financial interest in that project should automatically be covered. So I'll give you a little scenario, a little real life example. So we have a window contractor. So he's going to install the windows. You know, it might be $100,000 or more worth of windows in a given house. The windows are delivered to the job site, not installed yet. Somebody steals the windows over the weekend. So you say, no problem, GC's got that covered on their builder's risk policy. Well, maybe, maybe not. I have seen many policies that do not automatically include the subs, their financial interest in the project. So let's just say that's one of those policies. So now we got $100,000 worth of windows that have been stolen, and the sub goes to the GC, where's my coverage? The GC goes, I'm sorry, you don't have any coverage. And then the owner says, well, what do you mean? Where are the windows? So the sub's out 100 grand. It's a lot of money to a subcontractor. And now what else happens to that project? Now you got a delay in the project because they got to order new windows. You get the idea. Don't assume they're automatically covered. The relationship between the general contractor and the subcontractor is the most critical thing on a job site. So what I'm saying once again is just make sure those subs' interest is covered, because ultimately, even if you're insured as the GC, you need to make sure the subs are covered. And you just have to get a look at their policy. You don't know how many times I get involved and they said, oh, the builder's risk was only 2 cents. It was easy. Rate was cheap. Everything was great. And then I look at the form, and like anything in life, you usually get what you pay for. So if the GC or the owner goes with the very cheapest policy they can get, they probably don't have the right coverage. Simple as that. The lender, the last entity we're going to talk about. We'll talk about the bank or whatever type of lending institution we're dealing with. Once again, they have a financial interest in that project because it's been financed. Maybe 80%, 90%, whatever it's been of that project is financed. Most of the time, the lending institution in their contract with the GC or the owner, whoever's building the project, it'll say you're responsible for builder's risk insurance. So now the banks are like, okay, that's fine. And then we have banks every day that they'll request a copy of the deck page. So I guess they look at the deck page and they see a value, and then they see an address, and they say, okay, that must be properly insured. We're good to go. Once again, maybe, maybe not. It depends on the form, but once you add a lending institution as a mortgagee on the builder's risk policy, you need to read that mortgagee clause or an endorsement, however the company decides to do it. Most of the time, they're very broad. We call the mortgagee a super additional insured because it gives them certain rights that no other additional insured has. Just to give you a real life scenario, and it does happen, unfortunately. So let's say a building burns down and it was deemed to be arson. Maybe the GC or the property owner, somebody burnt the building down. Well, you would say, that's arson, that's excluded on the policy. Well, built into the coverage form on the mortgagee clause, the financial interest of the mortgagee would still be protected, even in the event of arson. Once again, super additional insured. So it's all about that mortgagee. You might have a lost payee. Sometimes those are written more as an individual. You have someone that has a very expensive piece of equipment, and they want to be named as a lost payee to protect their financial interest in that piece of equipment, and that can be done too. So I guess, once again, even as the leading institution, if you're involved in those, make sure you read the form, because they're not all the same. All right, so that was it. Pretty 20 minutes. We covered everything you ever needed to know about who's insured, but not really. So what I'd like to do is just leave you with a couple of thoughts. And I think we kind of covered these a little bit, but I think they're very, very important and they bear repeating. Once again, I've said this over and over again, get a copy of the form, look at the form. If you have doubts on the form, send it to me or somebody like me and have them do an evaluation of the form. Don't assume they're all the same. I mean, I really see agents doing a disservice to some of these entities. It's all about the coverage you're providing to your insured. So number one, the GC is your insured, you're going to protect their interests completely. Number two is I would look at the owner, make sure they're protected. The mortgagee is probably going to be okay as long as you add the mortgage clause, but that's another one. And this is something that happens all the time. You'd be surprised how many times we get this. So if there is no lending institution involved in a project, so there was never any demand for builder's risk, it was maybe built because the owner had a lot of cash, so they start the house. We had one the other day, $5 million home, and the property owner was paying cash for it. So what happened is the property owner, now it's 10 months along, and there's about 3 million of the 5 million completed. And they call us and they say, we need coverage. So wait a second, you have a $3 million worth of property that's exposed with no coverage? And they go, yeah. And I go, well, what happened? And they go, well, the property owner thought the GC had the policy, and the GC thought the property owner had the policy. I'm like, oh, that's not good. Because then they realized, even if I'm paying cash for this thing, that's a lot of exposure. The problem we have now is maybe you get something that's 60, 70, 80% complete. I don't know of any standard builder's risk program that will insure that risk. So now you're really stuck. Maybe you have to go to Lloyd's market, or you got to try to talk a carrier into writing some kind of permanent. You got a big mess on your hands. So I guess the bottom line is if you have any GCs that are involved in any project, you need to make sure they tell you about everything they built. If they come to you and say, well, the owner didn't say this and that, but I just want you to know I am building this $5 million home, you might want to say, well, why don't you get a copy of that owner's policy to make sure everything's all right? And then maybe we would write that coverage in the beginning, we'd be off and running, everything's fine. So that's the thing that seems to happen to us. I would say it happens once a week. We get something submitted that each entity thought the other one had it covered, and they didn't. So hopefully I've raised your awareness a little bit today. So what we would like to do now is open this up to questions. We'll give you a few minutes, but whatever questions you have on who's insured and how the different entities are protected, let me know. So Darcy, I'm available for questions.
All right, Jeff, we've got a few questions already.
All right.
So the first one is a bit long, so get ready.
Okay.
It seems that when a developer is involved, they want to buy the builder's risk with little input of the structure by the general contractor. How can we flip this to get our general contractor to buy the contract or to buy the coverage?
All right, so it is a problem because if the developer is saying no, I want to carry the coverage, I think as a GC you have the right to say, well, I want to make sure all my interests are covered. And it can be done properly with the lender as an additional insured, but then you have to say, you got to look at the form, you got to add the GC as an additional insured, and you got to make sure all the things are covered, like theft of building materials, even in transit, things like that may or may not be covered. And if not, I would go back to the developer and say, you need to get this coverage for me. Because I guess what I'm saying is if we write the policy in the name of the lender, our form will respond to the GC's interest, but not all's will. So, I mean, I think it goes back to the relationship the GC has with the developer. Good question.
All right, next question. If there are multiple builder's risk policies on a project, how are the claims handled?
Well, first of all, we don't like that too. That's the other thing. We don't like having multiple policies because it creates a nightmare on the claim because everybody's going to be pointing fingers at each other. So first of all, if you're aware of that, you need to definitely go to the carrier, make sure they're aware of it. Probably they would get off the risk. That's how bad it is in a claim situation. The same thing is when you have a renovation, you have an existing structure that's being renovated, and you'll say, oh, no problem, the existing structure is covered by Tumbleweed Mutual. We just want you to insure the renovations. Another claim nightmare, because what's going to happen is there's a collapse or something happens, who pays? Does Tumbleweed pay or do we pay? So I guess the bottom line is I don't know any carrier that knowingly goes into a deal with multiple policies. Now, that's not talking about, participation when we have a quota share and all, that's something completely different. I'm talking about the normal builder's risk policy where normally it would be all covered by one carrier. If that ends up getting split up, most carriers would not do it. They would not do that knowingly. So I guess if you become aware of it, I'd get on the phone quick with the underwriters and work it out. Good question.
All right. Is the delay in coverage only available if the policy is issued to the property owner?
Interesting question. So delay in completion has a few major coverage parts. And the answer is no, not necessarily. But if you're a GC, you're not going to derive any income from rental income because when the project's done, it's transferred to the property owner, they get the rental income, you don't. So no exposure to the GC. So if there's no exposure, builder risk is pretty simple that you don't need that coverage. Now, sometimes the GC and the owner are the same entity. I've actually seen that happen before. Then you could have the delay in completion, for both entities. Soft cost is another it's more of a different animal. Covered cause of loss. We have certain reoccurring expenses, advertising expenses, and things like that. The GC could have that exposure. So I guess it just depends on which coverage part you're talking about under delay in completion. You have soft costs, you have income coverage, and then rental income coverage. So I guess that's kind of a complicated answer to the question, but it is rather complicated. So another good question. You guys are asking me good questions today. I like that.
All right, this is kind of a fun one. What are the top 2 mistakes you see regarding named insured or /AI issues on the builder's risk policies?
Well, like I said, I've told you a few of them already today. There's, I've seen them. One of the things I see the most is the project is completely uncovered. You'd be amazed what I've seen and the values that are sitting out there. And when you think about builder's risk, the rate per 100 is pretty low. So it's a pretty inexpensive coverage. And so even someone that has lots of cash, and I can't mention the family, but we insured one and they were building a very, very nice home. And there was a mess up between them and the GC and nobody got the coverage. And even though they had plenty of money, once they found out how much they could have covered the project for, if they'd had proper builder's risk, they were not too happy. So they weren't too happy with their agent who had not taken care of them. So that when the complete project is, I had one that was like 9 months, 10 months done on a 12-month project, and they just discovered they didn't have coverage. And they had the entire value sitting there. Because if you think about a builder's risk project, most of the exposure is at the end of the project. It's not the beginning. So if you don't have any coverage in the beginning, you're thinking that's no big deal. But now when you have 70, 80, 90% of the exposure there, and it's sitting there, and maybe it's in brush fire territory, or maybe it's in a coastal area. So now you got all this value sitting there, and the storm is bearing down on the project. And then they discover they got no coverage. So now you have everybody pointing fingers at each other. Not a pretty thing. You do not want to be an agent involved in that. I don't want to be the underwriter involved in that. Nobody wants to be involved in that. Other than that, I've seen some of what I'll call high-end subcontractors. Maybe they're installing, we had one that was, I don't even remember the value, but it was an extremely expensive front door. probably is worth as much as my house. We're talking about a very, very expensive door. And everybody assumed that all the coverage was there because the door is part of the house. And unbeknownst to us, there was a little clause in the policy that said it was covered once it was attached. Well, the door happened to be sitting on the front steps and it wasn't attached yet. And something happened. The door mysteriously disappeared. So that was a fun one. So you don't want to be that agent for that subcontractor. So I've seen that happen before. So I mean, I could go on and on and on with these, but it's a big deal. Hopefully I made my point. I don't sound like I'm preaching a little bit. Good question.
All right. Is hot testing usually covered under a builder's risk policy?
Is hot testing covered under builder's risk policy? So under our form, we have something called testing of building systems. And that means the normal systems within a house would be automatically covered, not the same on all forms. Hot testing per se would not be covered on our form. It's an optional coverage. Let's say you had a boiler and you needed true hot testing coverage. You could get that. You just have to, usually it's an optional coverage. It's not super expensive, but you have to buy it. And another coverage that's readily available today is equipment breakdown, which is probably a broader coverage than testing. So I'd recommend looking into equipment breakdown for most of the smaller builder's risk policies. It's good coverage. So hopefully that helps. So good question.
All right. How do I make sure my client, who is the owner, is properly covered if the builder carries the builder's risk policy and walks away from the project?
Well, that's so if the GC walks away, I doubt it if the policy has been paid. So it probably is expired or it's lapsed or something. So you immediately need to get on the phone and try to find a carrier that will write that project for the owner to protect your owner. And it will be a trick if it's, depends how far along the project is, but immediately you need to start working on coverage, because I would assume in that case, there's no coverage. And we do get involved a lot of times where something happens and the builder switches in the middle of the project. And just depending on how far along it is, it might not be a problem. If you can prove the new GC has adequate experience, the project's not too far along, we write the policy and we're good to go. So it's going to depend on really how far along it is. It's always back to that. Good question.
All right. Is there a special way to write a builder's risk policy to include really expensive items that are waiting to be installed?
Yeah, I mean, there's one of the typical coverages, first of all, you have either temporary stored somewhere else or in transit. Those are sublimits that are on a lot of builders' risk policies. So you need to look at the policy that you're selling to see what the built-in limit is. Most carriers have some kind of built-in limit. And then if it goes above that, you have to buy additional coverage. But that's a lot of these high-end things being built. I always go to like the windows, the doors, even the flooring, the tile work. We insure some homes that have extremely expensive pools. So you have all that expensive ornate stuff, So you can, I was watching a show the other day, that Insane Pools, give that guy a plug. It's a pretty interesting show. But he was building $1 million pools. But I'm thinking of all that building. Every time I watch a show like that, I'm thinking it from a builder's risk standpoint. I'm wondering if the GC or what kind of coverage that guy has. Think about that. So hopefully he has proper coverage, because you got, statues, ornate, rocks and plumbing, electrical, lights, all that stuff goes into these things. So yeah, you need to make sure they're covered correctly. Have the right limit. Good question.
Okay. Is there increased risk to the carrier when underwriting a builder's risk policy after construction starts?
Yeah, I think I've made that clear today. I want to keep going back over that. So the further along a project is, the more exposure it is for the carrier and the less chance they're going to do it. So it's just directly related. So it's 20% done. Most carriers, underwriters say, okay. 30% done, they start getting nervous. 50% done, they usually walk away. More than that, they're going to say, we're just not interested. There's too much exposure and we can't get enough rate for it. Because what happens as the project goes further along, it becomes more of a permanent property exposure, and those rates are much higher than builder's risk. So it's all the direct relation to how far along the project is.
Okay. Can the owner be named as an additional named insured and take over the policy if the general contractor goes under?
Probably not, because what most underwriters are going to say is we need to know, first of all, we need to know who the general contractor is, and we need to know their experience. So even when we write a policy in the name of the owner, we still need the name of the GC, and we need to know what their experience is. Because just because the guy has money doesn't know he knows how he doesn't know how to build something. So you probably would not, I mean, in that case, you could write the name of the owner, and then he's going to hire a new builder, new GC. So the underwriter would want to underwrite the new GC. And if that qualifies, you'd be okay.
All right, let's take 2 more questions.
All right.
Other than fencing and proper lighting, what type of protection should be included to properly insure the building?
So you ask me loss control questions now, and it's funny, depending on the value of the project, some, if it gets really, really expensive, there are carriers that will require a safeguard warranty. Saying things that you have to have it lit, you have to have a fence certain height. Sometimes they even require a guard, 24 hours, security cameras, all of those type of things. For the typical project, it's lower value. They're not going to require that stuff. Now, having said that, lighting is pretty inexpensive now. It's motion controlled lighting. I definitely would do that. And there are some builders that's becoming pretty cost effective to have cameras. So there again, I like the idea of a camera, but I don't know what that actually does. But it's probably a good thing. So I think that's the big ones. You fence it in, you protect it. You want to protect it from the kids just coming to play. It's more vandalism than it is theft. So you want to protect it from that. And this all studies show if it's well lit, they don't steal it as much. And I think a lot of it too is protecting it, maybe locking it up before at the end of the day. That'd be nice. We have a lot of builders that forget to do that. Simply locking. If the home is almost done, project's almost done, let's lock everything up. Make it a little harder to get in anyway. So a lot of times it's that end of the day walkthrough. We always tell the builder, walk through the project at the end of the day, or have somebody that does it. Just looking for things like locked windows, locked doors, looking for hot spots. Maybe the plumber was doing some welding and there's a hot spot. If you catch it at the end of the day, you might save the whole structure from burning down overnight. So those are some of the major loss control things that I personally think about. Good question.
All right, Jess, let's do the last question here. Is there a general rule of thumb to determine the existing structure value of a building that is, say, 120 years old?
You guys are all over the place today. So what we have is an existing structure. So we're going to have an existing structure and renovations. The renovations are easy. We know what we're going to put into it. The hard part is you have an older building, and how do we determine the value? A lot of times, nobody's going to write it for replacement costs. That doesn't make any sense from an underwriting standpoint. And if you do it just on actual cash value, it's really hard to figure out what the ACV is. Just how much depreciation does a 120-year-old building have? Nobody really knows. So this is a conversation you would need to have with the underwriter. And the way we handle those things is we do everything on a stated amount, which means we have an existing structure. We're going to talk to you. You're going to talk to us. We're going to work out a deal and say, we think this thing is worth X. And then we're going to attach that endorsement called stated value. And we're agreeing that this structure is worth $1 million and we're off and running. We have a total loss. There's no jumping up and down about ACV and replacement cost. It's the stated value. So that is the best way to do it. But that's an excellent question. And it is difficult sometimes because they have ornate architecture built into them, stained glass windows, whatever they may have. So we have to factor that in. just to give you a general rule of thumb too, I was reading the other day, I thought this was interesting. So if you have a frame building, and this is a general rule of thumb, you know, there are different types of frame buildings, heavy timber and stuff, but frame depreciates a lot quicker than non-frame buildings. So you got to factor that in. So if it's in the Northeast, it's a stone, concrete, and metal building, you know, that thing's going to last a long time. But if it's a frame building and it's in the Southeast somewhere, you know, we have things called termites and stuff like that down here. So things depreciate. Some of these frame buildings have been through the storms, that's good, but they're weakened each time a storm comes through. So that does affect the depreciation, rate of depreciation. Just keep that in mind. Good question. Is that it, Darcy?
Okay, Jeff. Those were all the questions for today.
Man, I like it. Really do appreciate the activity. Let's see if we can, already did that. So there's your 2 contacts. I just want to say once again, really thanks for taking time out of your busy day. Hopefully it's worth your while. We got some new things coming up, exciting things to talk about in the near future. We'll make sure you're the first to know. Here's my contact information and Donna's. If you have any question whatsoever, pick up the phone and call us, send us an email. We'd love to hear from you. So guys, have a great day. Stay healthy, and let's go write some builder's risk business. Good luck. Have a great day, guys.